Gold prices are hitting record highs, pushing past levels we haven't seen in decades. This surge is fueled by massive global demand as investors seek a safe haven from economic uncertainty and rising inflation. As a result, the profit margins for Australian gold miners are widening significantly, far beyond what they experienced in previous commodity cycles. This isn't just a price spike. It's a fundamental shift in the market's dynamics, creating a windfall for the industry. The high price is the spark, but the real story is how companies are reacting to it this time around. It signals a mature industry ready to capitalize on a global phenomenon without repeating the mistakes of the past. This mining cycle is fundamentally different from the boom and bust periods of the past. Miners are now prioritizing strict capital discipline, a stark contrast to the reckless expansion that often characterized previous rallies. Instead of pouring every dollar into speculative new projects, companies are rewarding shareholders through consistent dividends and strategic share buybacks. This cautious approach is building a more sustainable foundation for long-term growth and stability. Investors are no longer just betting on the gold price, but on the financial prudence of the companies themselves. It's a boom built on spreadsheets and strategy, not just shovels and speculation. A key driver of this new era is the widespread adoption of advanced technology. Miners are leveraging innovations in automation, data analytics, and exploration techniques to boost efficiency and dramatically lower their operational costs. These tools allow them to pinpoint high-grade deposits with greater accuracy and extract ore more productively than ever before. This technological edge is reshaping the entire value chain, from discovery to processing. The result is a more resilient and profitable industry, where investor confidence is shaping a more sustainable boom, insulating it from the volatility that plagued past cycles. This isn't just about digging more. It's about digging smarter. Leading this charge are major players like Northern Star and Evolution Mining. These Australian giants are cautiously expanding their operations, focusing on maximizing value from their existing assets. Their strategy revolves around acquiring high-quality, long-life mines and making strategic acquisitions that complement their portfolios rather than engaging in risky greenfield exploration. This measured approach ensures that growth is both profitable and sustainable over the long term. They are setting the industry standard for responsible expansion, demonstrating that discipline and ambition can go hand in hand. Their leadership is a core reason why this boom feels so different from anything before. The global economic landscape is a primary driver behind this gold fever. Central banks around the world, particularly in emerging markets, are aggressively buying gold to diversify their reserves away from the US dollar and hedge against geopolitical instability. At the same time, retail investors are flocking to gold as a trusted store of value to protect their wealth from persistent inflation. This dual-pronged demand from both institutional and individual buyers creates a powerful and stable floor for the gold price. Australia, with its politically stable environment and well-regulated mining sector, is perfectly positioned to meet this demand. The country's reputation for reliable production and ethical sourcing attracts significant international investment, further fueling the boom. However, the industry is not without its significant risks and challenges. Rising operational costs, driven by inflation in fuel, equipment, and materials, are putting pressure on profit margins even with high gold prices. A persistent shortage of skilled labor across the mining sector adds another layer of complexity, making it difficult to maintain and expand operations efficiently. Furthermore, there is always the risk of a market correction. If global economic conditions were to stabilize unexpectedly, or if investor demand were to suddenly slow, the price of gold could retreat from its current highs, impacting the entire industry's profitability. Beyond the economic headwinds, miners face growing sustainability and environmental pressures. Society's expectations for responsible mining are higher than ever, and large-scale operations are under intense scrutiny to minimize their ecological footprint and engage positively with local communities. Meeting these stringent environmental, social, and governance ESG standards requires substantial investment in new technologies and practices. Navigating this complex regulatory and social landscape is a critical challenge. For every company in the sector, failure to do so not only risks reputational damage, but can also lead to operational delays and financial penalties. So, why is this boom so unlike the ones that came before it? The primary difference lies in the unprecedented level of financial discipline being exercised by mining companies. The old playbook of growth at any cost has been thrown out, replaced by a focus on shareholder returns, debt reduction, and prudent capital allocation. This disciplined approach is creating healthier, more resilient companies that are better equipped to weather market downturns. It's a fundamental shift from speculative expansion to sustainable value creation. Another defining feature is the transformative impact of modern technology. Innovations that were once on the horizon are now standard practice, driving down costs and boosting productivity across the board. From AI-driven exploration models to automated haulage systems, technology is unlocking efficiencies that were unimaginable in previous cycles. This allows miners to operate profitably, even with rising input costs, and to extract more value from their existing assets. It's not just about finding more gold. It's about making the entire process more efficient and cost-effective. Finally, the nature of the demand itself is stronger and more diversified than ever. In the past, booms were often driven by speculative retail investors, but today's demand is underpinned by powerful, long-term buyers, central banks, sovereign wealth funds, and institutional investors are buying gold for strategic reasons, providing a stable foundation for the market. This, combined with continued strong retail demand, creates a powerful and durable tailwind for the gold price, making this Australian gold boom feel less like a fleeting rally and more like the beginning of a new, sustainable golden era.